Welcome to the deep dive. Look, our goal here is simple. Grab a whole stack of information, dive right in, and pull out the absolute must-know insights just for you.
Mm-hmm.
And today, we're taking a deep dive into Delta Electronics, Thailand Public Company Limited.
That's right. We've got their latest financial report, the one covering the first quarter of 2025. And we've also got some analyst perspectives to kind of layer on top.
Right. And the mission, as always, is to cut through all the jargon, unpack these documents, and really pull out the key takeaways. So you can get a quick but, really solid understanding of what's actually happening with Delta.
Yeah, get right to the core of it.
We'll hit the latest numbers, figure out what's behind them, check their financial health, and see what, let's say, the professional guessers out there are thinking.
Yeah.
And it's going to be interesting because, well, you'll see. The numbers seem to tell one story, and the analysts, maybe a slightly different one.
Definitely sets up an interesting discussion.
Okay, so first things first, setting the stage. Who exactly are we talking about here? Delta Electronics, Thailand, PLC.
Okay, so they're a major player listed right there on the Stock Exchange of Thailand. The source material also notes their address over in Samit Prakarn, Thailand.
Got it. And the main financial report we're digging into, which period does that cover exactly?
That zeroes right in on Q1 2025, so January through March. And these are based on their reviewed consolidated financial statements as of March 31st. The report itself came out April 25th.
Okay, April 25th.
Yeah.
Pretty recent then. So official Q1 numbers from the company. And you mentioned we also have analyst views.
Exactly. That's the other key piece we're looking at. Insights based on, recent analyst predictions and ratings for Delta.
Perfect. Okay, let's dive into those Q1 numbers because, like I hint, they look pretty striking on the surface. Let's start at the very top. Sales revenue.
Right. Sales revenue for Q1 hit 42,736 million baht.
42,000 million. Okay.
Right.
How does that stack up compared to before?
It shows, pretty solid growth, actually. That's up 12.5% compared to the same quarter last year, Q1 2024.
12.5% year on year. Okay.
And even looking quarter over quarter, so compared to Q4 of 2024, sales were still up 2.4%.
All right, so clear growth on the top line.
Okay.
But did that translate, down the income statement? How about profitability? Let's look at gross profit first.
Gross profit came in at 10,927 million baht. And here's where you see, a much bigger jump. That's up 37.1% year over year.
Whoa, okay, hold on. 37% jump in gross profit. That's way higher than the revenue growth.
Yeah.
So what happened with their gross profit margin? That usually tells a story, right? Efficiency, product mix.
Absolutely, you nailed it. The margin saw a really substantial expansion. It went from 21.0% back in Q1 of 2024.
21%.
And it was 22.5% just last quarter, Q4 24. But in Q1 25, it jumped all the way up to 25.6%.
25.6%. That's a significant improvement, really turning more revenue into actual gross profit.
It really is.
Okay, so carrying that trend down, operating profit.
Operating profit was 5,700 million baht, and this number, even bigger year-over-year leap, up 53.2%.
53%.
Yeah, and the operating profit margin shows it. That rose to 13.3% in Q1 2025. Compare that to 9.8% a year ago,
Okay.
and just 5.6% in the previous quarter, Q4 2024.
Wow, that Q4 to Q1 jump in operating margin is huge, almost tripled. Okay, and the final number everyone looks at, net profit.
Net profit landed at 5,488 million baht. Showed strong growth here, too, up 27.4% year over year.
Still very solid. And the net profit margin.
That improved, too. It reached 12.8% in Q1 25. That's up from 11.3% a year ago, and quite a jump from 5.2% in Q4 24.
Okay, and just quickly, earnings per share.
EPS followed suit. Increased to 0.44 baht in Q1 2025, up from 0.35 baht in Q1 2024.
So just looking at the income statement versus last year,
Yeah,
it seems like a really strong quarter pretty much across the board.
very much so.
Okay, the numbers look good. Revenue up, margins expanding significantly, healthy profit growth. Now the big question, why? What drove these results? Let's unpack that 12.5% top-line growth first. Where did it come from?
Yeah, the report's actually quite clear on this. The main driver was strong performance in their high-efficiency power management solutions,
Okay, power management.
and specifically the demand coming from data center infrastructure.
Data centers. Why the boom there? Is there a
Yeah.
particular trend driving that? We hear a lot about it. But
No, absolutely. It ties directly into, all the investment that's accelerating in artificial intelligence tech.
the AI connection.
Right. AI digital infrastructure, high-performance computing. There's just sustained, really strong demand from companies building out cloud services and network infrastructure. So yeah, you're seeing that whole AI trend directly reflected in Delta's sales numbers.
That makes a lot of sense. A clear link.
Yeah.
Were there any other significant revenue drivers? Or was it all data centers?
Industrial automation also showed steady growth, which is good, but it's also important to note what didn't drive growth this quarter.
Okay.
Revenue from their electric vehicle solutions, their EV stuff, that remained pretty subdued. They blame volatile demand conditions in the EV sector for that.
Interesting. So the EV hype maybe isn't translating into steady orders just yet for them.
Seems like it. And their fan and thermal management systems and the power solutions for telecommunications, those were stable, but didn't really show growth either.
Okay, so it wasn't like a rising tide lifted all boats. It was very specific areas,
Yeah.
really dominated by that data center and AI-related demand.
Precisely.
So what about that really impressive jump in the gross profit margin then? You mentioned efficiency or product mix earlier.
Right. So the report points to, well, obviously the strong sales growth itself helped, especially in their power electronics segment. But the really significant margin improvement, that was primarily driven by a favorable product mix.
Meaning they sold more of their higher margin stuff.
Exactly. A higher proportion of their more profitable products went out the door this quarter.
And hang on, didn't you mention something about raw material costs making the comparison tricky?
Yes, that's a really critical point for comparing year over year. Back in Q1 2024, they actually recorded a raw material cost revaluation. This happened when global supply chains were normalizing, right?
All right, I remember that period.
So that revaluation negatively impacted their margin back then in Q1 2024. This year, Q1 2025, that specific headwind just wasn't there, which, makes this year's margin look even stronger when you compare the two periods directly.
Okay, that makes perfect sense. So better product mix plus no repeat of that specific cost issue from last year. Got it. Now, what about expenses? Selling, admin, R&D costs?
No.
They actually went up year over year, didn't they?
They did, yeah. Those expenses totaled 5,227 million baht. That's a 22.9% increase compared to Q1 last year. And the report says this was mainly because of elevated investments in research and development.
R&D.
A nearly 23% jump in those costs. Why such a big push on R&D right now? Well, it reflects their strategy. They're consciously investing to strengthen their tech capabilities, build up their talent base, basically positioning themselves for longer-term growth, especially in those high-demand areas like AI infrastructure that we just talked about.
So spending money to make money, essentially. Strategic investment.
Exactly. And the report does make a point of saying that even though the absolute spending increase, they kept, strong cost discipline. So the ratio of these expenses to their total revenue was actually lower than it was the previous year.
Ah, okay. So spending more in bot, but managing it efficiently relative to the growing sales. That's key. Were there any other significant factors hitting that final net profit number?
Yeah, a couple things mentioned. There was a positive impact from a bot 437 million Garul gain on exchange and other income. So currency movements helped a bit.
Okay.
But on the other side, they also had to recognize a bot 785 million provision. It's for something called a top-up tax.
A cop-up tax? What on earth is that? Sounds new.
It kind of is for practical purposes in Thailand. It's based on the OECD Pillar 2 rules, those international tax rules trying to make sure big multinational companies pay a minimum level of tax everywhere.
Right, the global minimum tax idea.
Exactly. Thailand adopted those rules effective after January 1st, 2025. So Delta had to account for this potential tax liability this quarter. And that provision obviously impacts their tax expense and therefore their net profit.
Right. Thanks for clarifying that. It's easy to miss those details. Okay, so summing up the income statement, strong operations, strategic R&D spend paying off relatively, and this new tax thing to account for. Let's shift gears. Let's look at the balance sheet. Give us a snapshot of their financial health, their resources. How did total assets change?
Total assets increased by 5.5% just in the first quarter. They reached 129,893 million baht by the end of March 2025. That's up from the end of 2024.
Okay, 5.5% growth in assets. What were the main things moving within that?
Cash, receivables. Yeah, good examples. Cash and cash equivalents went up 9.1%, over 17 billion baht now. And that's a good sign, right? They attribute it to increased cash flow from their operating activities, which makes total sense given the strong sales and profits we just talked about.
More profit, more cash. Makes sense.
And trade and other receivables, money owed by customers, that also rose by 12.5%. Again, pretty consistent with the higher sales revenue.
Okay. What about inventory? Were they stocking up?
Actually, no, inventory decreased slightly, down 2.4% to just over 30 billion baht. The company says this is due to tighter control over managing their raw materials, so less cash tied up sitting in inventory.
Better management there. Good. And property, plant, and equipment? PP&E, were they investing in physical stuff, factories, equipment?
Yes, absolutely. That line item rose by 3.6%, now over 39 billion baht. And this reflects their continued investment in expanding their physical footprint. They specifically mention R&D centers and new factories.
Where are they building?
South India, and also expanding in Thailand at Bangpoo and the Wellgrow Industrial Estate. So, yeah, definitely putting money into building capacity for future growth.
Okay, so on the asset side, more cash coming in, more owed from higher sales, tighter inventory control, and clear investment in new facilities.
Yeah.
How about the other side? Liabilities, debts, and obligations.
Total liabilities saw a smaller increase, up 2.7% overall to 44,317 million baht. The main things driving that increase were increased trade payables, basically owing suppliers more, which again aligns with higher sales activity.
Right.
And that provision for the new OECD Pillar 2 top-up tax we just discussed, that sits on the liability side until it's potentially paid.
Got it. And the final piece of the balance sheet, shareholders' equity, the owner's stake.
That increased by a healthy 7.0%. It's now up to 85,576 million baht. And this increase comes directly from the net profit they earned during the first quarter, which it gets added to equity.
Okay, so the balance sheet looks pretty solid too. Reflects the good profits, seems to support the strategic investment they're making. Which brings us to that other source you mentioned, the analyst perspective. Because here's where things get, well, maybe a bit puzzling. Given these strong Q1 numbers, what are the analysts actually saying about Delta?
Right. This is where the contrast comes in. Based on the TradingView source we have, which apparently covers forecasts from 18 different analysts over the last 3 months, the overall sentiment is, well, it's starkly different from that strong Q1 performance we just detailed.
How different? What's the verdict?
The majority of these 18 analysts, they actually support a strong sell trend, and the overall rating compiled from all of them is simply sell.
Hold on. A sell rating. Despite that huge jump in operating profit, the solid revenue growth driven by AI trends, the strategic investments, that just seems counterintuitive. What are they seeing? Or maybe what are they not convinced by these short-term results?
It is a puzzle, isn't it? I mean, the source itself doesn't spell out the exact reasoning behind each analyst's call, but typically in these situations, analysts might be looking beyond the immediate quarter. They could be concerned about longer-term risks like market saturation, maybe increasing competition down the line, or perhaps just valuation concerns. Maybe they think the stock price already reflects the good news, or it's too high compared to peers.
Or potential slowdowns ahead that aren't visible yet.
Exactly. Things not yet reflected in the Q1 numbers we just saw. And their price targets certainly reflect this more cautious or even negative outlook.
What are those targets looking like?
Well, the average one-year price target estimate among them is 74.50 Thai baht. But, and this is telling, there's a really wide range in those estimates. The highest prediction is way up at 125 baht, but the lowest is down at just 45 baht.
Wow, 45 to 125. That wide a spread definitely signals a lot of uncertainty or disagreement among the forecasters themselves.
It really does.
And, it's crucial to remember, as the sources themselves point out, this analyst stuff isn't investment advice. It's just one input, one set of perspectives. You absolutely have to do your own homework and analysis.
Absolutely. It's a data point, maybe an interesting one given the contrast, but not, a directive telling you what to do.
So looking ahead then, what does Delta itself see as the key risks they're facing, and where do they see the big opportunities?
Okay, so based on the report summary provided, they do acknowledge risks, things like geopolitical tensions and how they impact the whole technology sector, also the general volatility of, global economic prospects, and market competition is explicitly mentioned as a risk too.
Standard stuff for a global tech player, perhaps. And on the flip side, the opportunities. Where do they see potential?
Well, their stated opportunities line up perfectly with what drove their success in Q1. They see potential from that continued increasing demand for their high-efficiency power products, specifically for data centers and that AI infrastructure build-out.
Makes sense. Keep leaning into what's working.
Right, and also the continued expansion of their industrial automation product group.
Okay. So despite acknowledging those global headwinds, they seem focused on leveraging these very specific high-growth tech trends. What's their overall tone, their stated outlook?
They describe it as Cautiously optimistic. So, balancing those risks they see with the clear opportunities they're pursuing in areas like AI and automation.
Cautiously optimistic.
Oh.
Okay, so let's try and connect all these different threads then. We've gone through the numbers, the drivers, the balance sheet, the analyst views, the company's own outlook. What does this whole deep dive into Delta's Q1 really mean for you, the listener?
Well, I think it shows pretty clearly that Delta had, financially speaking, a very strong start to 2025. We saw that significant top-line growth really fueled mostly by demand for their power solutions, especially in data centers linked to AI.
And crucially, that growth flowed right through to the bottom line.
Exactly. Beautifully, in fact. With those expanding margins, driven largely by selling a better mix of products.
And importantly, they're not just, banking the profits. They're actively investing back into the business in these key areas.
That's a key takeaway, I think. The balance sheet shows it. They're putting real resources into R&D, expanding their manufacturing capacity. That signals they have confidence in these long-term trends, even with those global uncertainties swirling around.
But then there's that fascinating disconnect we keep coming back to.
Right, and that's maybe the most insightful part of this whole exercise. Seeing this really strong reported operational performance right alongside the prevailing sell sentiment from a chunk of the analyst community.
Yeah.
It just highlights that the market's view, or at least the analyst's view, isn't purely based on the last 3 months of results. They're likely weighing future challenges, maybe valuation, maybe other macro factors, differently than just looking at the Q1 report in isolation. And understanding that tension, that difference between current results and external sentiment, that's a really crucial dynamic for anyone looking at this stock, or any stock, really.
And zooming out a bit, looking at Delta specifically, kind of gives us a real-world window into some much larger forces at play, doesn't it?
It really does. I mean, this company is a concrete example of how massive trends like the AI infrastructure boom we talked so much about, or the ups and downs in the EV market, are directly impacting actual businesses right now.
Yeah.
You get to see how one company is navigating those global geopolitical risks, the economic uncertainty, through strategic investments in specific growth areas while also trying to manage costs. It really brings those big abstract headlines down to the level of a single company's performance and strategy.
So, yeah, this deep dive really took us from the raw numbers, sales, profits, margins, through the why behind them, a look at the company's financial foundation with the balance sheet, and then layered on those outside perspectives for market analysts. It definitely underscores the value, I think, of looking beyond just the headlines to understand the full picture of the context.
Understanding that context, yeah, it makes all the difference, doesn't it?
So here's maybe a final thought for you, the listener, to chew on, building on everything we've just discussed. Given Delta's demonstrably strong Q1 performance, which seems driven by smart strategic investments in really high-growth areas like AI infrastructure. How do you reconcile that with the analyst community's overall sell rating? What factors, hidden or obvious, might explain that gap in perspective? And if you were analyzing it, how would you weigh the concrete current results versus that more cautious or even negative future market sentiment?
Yeah, definitely a lot to think about there.
Thanks for joining us for this deep dive. We'll catch you on the next one.